What is up, investors, and welcome back to the Everything Crypto Show. I'm your host, Everything Crypto, here to bring you the latest and most important news moving the crypto markets. Now, as always, please remember that nothing on this channel is financial advice. These videos are for viewer education and entertainment purposes only, so please invest responsibly, as I want this community to thrive in the long run, and I love and appreciate you all. And with that said, it is time to sit back, relax, grab that morning cup of joe, and enjoy the show, as we have tons of content to get through today, including some more massive burns from CRO, Voyager going bankrupt, and what that means for people whose funds are locked on the platform, as well as taking a look at what some of the biggest Ethereum whales are doing in this bear market. Now, before we get into all this information, I just want to ask that if you do enjoy the content, hit that sub and like button. It costs you guys nothing, and it does mean a whole lot to me. Also, drop your comments, or your questions rather, in the comments down below for the next Q&A stream, which will be this Sunday, July 10th at 9:30 a.m. And make sure to follow us on Twitter if you want to keep up to speed with all the moves we are making in the market. Now, for starters, you're going to take a look at the total crypto market cap that is currently sitting at $890 billion. We are still well below that $1 trillion level, which is the next big level of resistance that we do need to get back above. And the one thing that the bulls will point to here is that we are still sitting above that 2018 all-time high at 750 bill, and we are also currently above the 200-week moving average, which does look incredibly bullish. However, when I actually take a look at both Bitcoin and Ethereum, they don't look as strong. In fact, Bitcoin here is just hanging in above that 2018 all-time high of 20,000, and it is about 10% below that 200 weekly moving average at 22.3K, and I am not taking any move on Bitcoin seriously until we get above that weekly moving average. And then Ethereum here is still well below that 2018 all-time high of 1,400 and still decently below that 200-week moving average at about 1175. However, it is definitely closer than Bitcoin to breaking that 200-week moving average. And if we take a look at the ETH to Bitcoin valuation here, interestingly enough, it does appear to be cooling off a little bit. ETH actually has been outperforming Bitcoin over the last week and a half. But as you can see, we are still very well in a downtrend here. I think that ETH is just trying to hold on to this long-term level of support on the ETH versus Bitcoin valuation. But I do suspect that as long as the bear market continues, that ETH will actually break this support against Bitcoin, as Bitcoin does tend to outperform ETH in bear markets, as well as lead the pack in the beginning of the next bull run, and then it takes a backseat to ETH, and then ETH takes a backseat to alts, and that is generally how the bear and bull market cycles have worked in the past. So now moving on here into some contradicting news between two of the largest banks in the US. We have Citigroup warning of an oil collapse to $65 by year end, and JP Morgan seeing a stratospheric $380 per barrel. Now, the reason that Citi is warning of a collapse is because of an incoming recession fear, and JP Morgan is warning of this $380 price tag because of more Russian cuts to the oil supply. So just a friendly reminder that nobody knows what the F they're talking about, all right, guys? But if I did have to actually pick a side here, I do tend to agree a little more with JP Morgan in this scenario. Now, I do already believe we are in a technical recession. You cannot convince me that these past 3 months we saw any positive GDP growth. That means it would mark the second quarter of a negative GDP growth, which is a technical recession. However, unless it is a prolonged and dragged out recession, I do actually believe that Russia cutting their oil supply would have a much bigger impact on the supply-demand side of things. So definitely scary scenario either way, but we'll have to see how this plays out. And just in case you needed another reminder that nobody knows what they're talking about, a tweet from James Lavish here reads, the bond market, the stock market, the crude market, the commodity market, the housing market, and you forgot the crypto market, all see a recession incoming, yet strangely, the Fed still does not see a recession coming. Now, I don't believe this is true. I think the Fed fully knows a recession is inbound, but they are waiting until the next GDP meeting on July 28th to officially announce it. That'll give them one more CPI data reading to try and get that inflation number down, which we all know is manipulated. But mark that date. We've been talking about it now on this channel for a while. Mark July 28th, as I do believe that is when Jerome Powell will officially say the R word and potentially scare the crap out of everyone. Now, as promised at the beginning of this video, we are going to take you through how we monitor what the top 100 ETH whales have been doing throughout this bear market, what they have been buying, what they have been selling, what their largest holdings are. So we are about to drop some serious alpha on you guys that you are definitely going to want to stay tuned for. But first, I'm just going to bring you a quick word from this video sponsor. Now, you guys know that security is the #1 priority on this channel, which is why I would like to take a second to thank this video sponsor, Atlas VPN, who is running a huge discount right now on a 3-year plan for just $1.99 per month with a 30-day money-back guarantee. Now, as you can see here, when you actually line up Atlas VPN against the competition, it outperforms in all categories, including this very attractive price point. So what exactly is a VPN and why should you get one? So a virtual private network reroutes all your internet traffic through an encrypted tunnel. It defends against online snooping, be it hackers, governments, or ISPs. Also, a VPN masks your IP address, which can protect you from censorship and other internet restrictions. Now, we're going to focus mainly on the airtight security of Atlas VPN, which is the main reason that I am a personal user of this product. And you're going to note that based on Chainalysis report here in 2021, $3.2 billion worth of cryptocurrency was stolen. In 2022, within just Q1 alone, already $1.3 billion has been stolen. And basically, the amount of money being stolen in this space is growing exponentially, unfortunately. And what's even more concerning here is if we actually take a look at the reason for these thefts, the #1 reason and the fastest growing reason that these thefts takes place is through security breaches. And this is why Atlas VPN is a must if you are a crypto investor for actually securing your data, as it does two key things for you. For starters here, Atlas VPN helps you keep your browsing to yourself by rerouting all of your traffic through a secure tunnel. This means that digital entities will not be able to snoop on your online behavior. And secondly, Atlas VPN reroutes your traffic through a secure tunnel and performs end-to-end encryption to safeguard your connection no matter what Wi-Fi network you're on. So basically, what this VPN is offering you is the utmost security, unrestricted access, and allows you to save money easily. Once again, you can save a lot of money right now by taking advantage of this huge discount with a 3-year subscription for $1.99 per month with a 30-day money-back guarantee. So thank you, Atlas VPN, for sponsoring this video. I will leave a link in the description down below for those of you that are interested in securing your data. So this is Whale Stats here. This is a website that I visit pretty often, and what it basically does is gives you an analysis of the top 100 Ethereum whales by wallet. You can also look at the BNB whales, Phantom, Polygon, and Avalanche, but Ethereum being the most mature chain, you definitely want to be taking a look at the ETH whales in my opinion. It shows you here that the most traded token is Aave, the most widely held token is Mana, and the biggest token position by dollar value is SHIB. So if we want to take a look at what the whales have been buying and selling, we're going to go over here to the trade tab, and we can see that in the past 24 hours, they have been selling a crap ton of SHIB, Link, Aave, Quant, LRC, and Audio, as well as ETH actually. And now for the top 10 most purchased tokens, Ethereum is actually in first, and then you have Phantom, PaxG, Compound, UMA, and Aave. So we can pretty much just completely monitor what the whales have been buying as of recently. And if we actually go over to their holdings and take a look, I really like this little heat map here. It basically shows you what all the top whales are holding, excluding ETH, obviously, as that is generally going to be their #1. And you can see that 17.8% of the concentration is in USDC, with another 9% in USDT. Then 15.52% of the concentration is in SHIB, and another 11.7% in the SHIB Doge. So apparently these whales love the meme coins. But you can also see here, if we take a look at what the largest held exchange token is, it is actually CRO with 1.7% of the concentration of ETH wallets, and FTX comes in second place here, not even too close at 1.17%. So despite all the moves that FTX has been making, the whales still have the most amount of faith in CRO. Now, speaking of CRO, one big reason the whales might be loading up is because of the significant burns that the Crypto.com team has been doing as of late. Now, we started covering these burns when it was brought to our attention a couple of weeks ago that Crypto.com had essentially burnt about 23.6 million CRO within just a couple of days period, and now they are back at it again, burning like absolute savages. As you can see here, just 5 days ago, we had a nice 18.7K burn, and just 4 hours ago, at the time of recording this video, we saw a 577.5K burn. Now, if we actually take a look at the chart, you're going to notice that the burns really did coincide with this local bottom that we saw around 10 cents. So I do believe that between the CRO fam buying that 10-cent dip, as well as Crypto.com burning significantly when we are down in this price zone, they have really created a nice level of support at that 10-cent mark. And I have received a couple of comments from people in the community basically saying that these burns are inconsequential, as they were already announced in that burn from from Crypto.com all the way back in February of 2021. And I do understand the confusion here, but it actually does still impact the float. And I'm going to explain this to you guys right now how this works. So yes, in February 2021, Crypto.com did announce a 70 billion burn, okay? It was a huge burn, and it was actually to the tune of about 76.6 billion as identified by this wallet here. So this is the null address where all of the CRO that is to be burnt has been sent, and it is being burnt off gradually day after day. But what you have to remember is that because the CRO is sitting in this wallet account, that does not mean that it's already been burnt. That just means it has been moved to the wallet for it to begin the burning process, which means that although this burn was announced in February of 2021, it still is a part of the float until this 76.6 bill has been fully distributed and burnt. So although the CRO burn was announced upwards of like a year and a half ago at this point, around a year and a half, it does still have a positive impact on the float as they do continue to accelerate the burn process. And I do believe that's why they have actually accelerated the burning since the bear market has started, to provide some solid support for CRO at that 10-cent level. But selfishly, I would love to go back down to 5.5 cents so I can absolutely back up the trailer. I do understand why Crypto.com is doing this though, and it really has shown on the price performance, as CRO has performed a lot better than the rest of these projects during the bear market, especially for an altcoin. Now, we have also seen another substantial partnership here for the Cronos chain with Go Plus Security, which provides token API. Now, we have also seen another substantial partnership here for the Cronos chain with Go Plus Security, which actually has an API providing fast and accurate contract vulnerability detection results for tokens automatically. And in my opinion, this is a partnership that people will sleep on, but it is incredibly important, okay? Never mind transactions per second or energy use per transaction. Security is the number one thing for any blockchain to actually give people confidence, to allow mass adoption, as people are ensured that their funds are safe on these blockchains. So this is a very big partnership for my opinion. It does show that Crypto.com is well aware of the need for security on the Cronos chain, and I definitely do look forward to seeing what partnerships they can come up with next. Keep in mind, the Cronos chain is not even a year old, which is absolutely insane to think about if we look at the progress they have made. Now, we just celebrated Crypto.com's 6th birthday. We have Binance's 5th birthday, and to actually celebrate their birthday, they're eliminating all fees on some Bitcoin trading pairs. I'm not going to lie, Binance's birthday gift is a little bit better than Crypto.com's giveaways. So if you are on Binance, if you are outside of Ontario and Binance is legal, then you can actually buy Bitcoin for 0% fees, which is actually very nice in my opinion, and definitely something to take advantage of if you were looking to pick up some Bitcoin. So taking a look at some other centralized exchange news, we need to talk about Voyager. It has been a crazy 24 hours, and in yesterday's video, I basically discussed how based on the numbers, I just saw no way that Voyager could actually make a comeback. And the reason being was quite simple. They were claiming they had about 1.3 billion in crypto under management. They had 650 mil that was loaned out to 3 Arrows Capital, which they are never getting back. And they had 350 mil with the Metropolitan Bank. So they had about 1 billion officially on their balance sheet, 650 million already down the hole, and 1.3 bill in assets under management. So if you run the math, there was pretty much no way they were going to be able to repay all of their customers and honor their funds. And they did finally today actually file for Chapter 11 bankruptcy. This comes as no surprise. We did warn about this in yesterday's video, and Chapter 11 bankruptcy allows a company to reorganize its assets and debts while staying in business. And the CEO of Voyager Digital did go ahead and tweet what this is going to look like. So basically, he said that customers with crypto in their accounts will receive in exchange a combination of the crypto in their accounts, proceeds from the 3 Arrows Capital recovery, which I still don't think is happening, common shares in the newly reorganized company, and Voyager tokens. So essentially, let's say you had like 30k USDC in a Voyager account, you might get back like 15k USDC, as well as 10k worth of Voyager tokens and 5k worth of Voyager stock or something like that. So they're definitely not going to be giving you like an exact refund, but I really hope that they are not banking on this 3 Arrows Capital recovery, because I just don't see it happening. And you can see here that they are getting absolutely crapped on social media for their tricky wording with the FDIC FDIC insurance, and this was definitely a very sneaky move in my opinion, where basically they were showing all over their website that all customers USD held with Voyager is FDIC insured up to $250,000, but then in contradiction, their customer agreement, which is obviously not as visible to people and right in front of their face, says that FDIC insurance does not protect against the failure of Voyager or any custodian. In fact, FDIC insurance coverage is available only to protect against the failure of the Metropolitan Bank where they hold their money. So what an absolute joke, honestly. They were basically saying they had FDIC insurance for Voyager. Voyager is not FDIC insured. Voyager themselves are insured if the Metropolitan Bank goes under, but there is absolutely no protection for their customers. So definitely very misleading wording and very sneaky on the part of Voyager. So I'm happy that this is being brought to light, because this is not a company that I would personally trust with any of my funds after all these events that have taken place. Now, because they did file for Chapter 11 bankruptcy, Voyager Digital has also been suspended from the Toronto Stock Exchange. And I mean, honestly, I don't really know who would want to touch this stock anyways. It's down like 98% or something like that in the past 6 months. Let's go on to the 1 year performance here. Yeah, it's down 98% in the past year. So because they have actually filed for Chapter 11 bankruptcy, they will not have any potential of actually doing some sort of an equity raise through selling their shares. But I think they've pretty much figured out that no investor is going to want to touch their shares with a 10-foot pole anyways after what they have been going through the past couple of weeks. Now, we also have FTX CEO Sam Bankman-Fried here, who we have been talking about a ton lately, as he has been making up a ton of moves in the market. He says that FTX has over $2 billion in cash they could use in crypto industry deals if needed. So essentially, Sam Bankman-Fried is ready to buy the dip, but only for the companies that he does see as fit, as he did actually walk away from a deal with Celsius. Now, we also had another big piece of news from FTX here. They've actually teamed up with Ledger to bring you a very secure trading experience. You can now swap 120 plus crypto assets with FTX through your Ledger Live. So I'm going to show you guys exactly how this works. Let me just get this video going. Okay, so how to swap crypto with FTX through Ledger, and in my opinion, this just makes it a lot easier to actually use a cold storage wallet, which I think is very important moving forward. So for those of you who don't know, when you go to your Ledger, you can actually swap your crypto directly within the app, and you can do it through these like third-party sources. I believe MoonPay is one of them. There are a couple of other ones, but you can now see that FTX is offered as a provider. So what you can do now is you can log into your FTX account through Ledger, and then you can go ahead and actually create an account if you do not have one yet. Then step 5, you can verify the swap details. So it's going to show you that 1 ETH is going to net you exactly 0.062 FTX. Yeah, so Changely is the one that you can also use on the Ledger Live. My apologies. And you can see here that FTX is actually offering you a better exchange rate on your Bitcoin than Changely is. So then you go to verify the swap details. You can check to make sure which exchange is going to give you the best spread essentially, and then you confirm the swap with your Ledger device, and boom, you can effectively make crypto swaps and transfers through cold storage, ensuring it is completely safe while utilizing FTX at the same time. So very, very cool partnership indeed. Now, we also have the Circle CEO speak out and say that Circle suffered no loss from any customer, creditor, partner, or counterparty as a result of recent industry issues. And we did cover yesterday how Circle fully disclosed their basically their balance sheet that does back USDC, with 80% being backed by US treasuries and then another 20% backed in actual cash. So their USDC is fully backed, and it will maintain that one-to-one peg. And in the last piece of news to wrap up this video, we see Polygon is actually joining the Solana train here and bringing Web3 to smartphones. So tech startup Nothing has tapped Polygon network to offer NFTs on its new phone. Polygon is by far the most sophisticated layer 2 in my opinion, and one that I am actually looking at if we do see another dip in the crypto markets. They recently announced their Avail blockchain, which is basically going to help with the scalability of building out on blockchains, and Facebook went ahead and implemented not only Ethereum but also Polygon NFTs into their platforms. Rather, they will in the very near future, which does show me that even big tech does see the validity of Polygon as a legitimate layer 2 solution. So very interesting to see that they are actually also partnering up here to bring Web3 to smartphones. So that is all for today's video. There was a lot of content to get through in this crypto market update. I hope you guys did enjoy the content, and I will catch you all in the next one. Peace out for now.